Gold is currently trading at $1,523.40. Silver is at $39.05. The silver-to-gold ratio is 39. Oil is at 103.35, and the U.S. dollar is at 74.55. First, China threatens nuclear option of dollar sales. The Chinese have begun a concerted campaign of economic threats against the United States, hinting that it may liquidate its $1.3 trillion in U.S. treasuries, or 44% of the U.S. national debt, if Washington imposes trade sanctions to force a yuan revaluation. Of course, massive selling in U.S. treasuries would be disastrous for the U.S. economy. U.S. default risk and a return to gold? Gold is selling for over $1,500 an ounce, up from $258 in 2001. While jewelry and industrial applications absorb at least 80% of the new supply, this alone cannot explain the increase in the price of gold. The answer? Inflation. Unless the United States gets its economic house in order, which is very unlikely, gold will become money again, and natural currencies will only be money if backed by precious metals. Next, more bad news for food prices as U.S. crop situation deteriorates. Because of the chaotic weather conditions, this year's crop is way behind schedule and not looking good compared to recent seasons, according to the USDA. The spring wheat schedule is way behind schedule with only 22% of the crop being planted. The situation in corn is bad too, as only 40% has been planted. If this continues, then this will compound the problem with obtaining food. Next, National Emergency Alert System set to launch in New York City. A new national alert system is set to begin in New York City that will alert the public to emergencies via cell phones. The messages, including urgent lectures from Obama, will supersede all other phone traffic. For now, the system is capable only on certain high-end cell phones, but starting next year, all cell phones will be required to have a chip that receives the alerts.
Let's bring in a long-term believer in higher silver prices, and he is the one and only Peter Schiff, the president of Euro Pacific Capital, also the author of Why an Economy Grows and How it Crashes. Peter, it's always good to speak with you. The fact that silver has moved down so sharply on the CME raising its margin requirements, doesn't that prove that a lot of silver's move was in fact fueled by speculation as opposed to fundamentals?
I would say that the moves over the last couple of weeks have been largely driven by speculators, but overall the entire bull market, no. I mean, it's driven by the fundamentals. Silver isn't rising because there are speculators. Because silver is rising, that's why there are speculators. They're attracted to the bull market, but they're not causing it. But certainly at certain points, speculators will add to volatility. And we had a huge move up before this correction. So it's hardly crashing. I mean, silver's at $40 an ounce. I'd argue it's right back to its trend line, and I think it's a good buy right now, not only for a long-term holder like me, but if you're a short-term trader, if you're a fast money guy, I don't think there's a lot left of this correction. I think you got a lot more upside now just to retest the 50 level, which it certainly made sense that you got a correction from 50. After all, that's the record high from 1980. But, speculators get a bad rap. A lot of times the speculators decrease the volatility because they increase liquidity. But at times, yes, they're highly leveraged and they can exaggerate some of the swings. But it does create opportunities for people who might have been missing out on silver and, it was at 48, 49, 50. Now they got a nice pullback. It's a good time to buy. I bet a lot of people have been suckered into the short side of the silver market, and these are people who have sold silver. They have to buy it back, and I'm convinced they will buy it back at much higher prices.
Mike Maloney of GoldSilver.com, author of Guide to Investing in Gold and Silver. Mike Maloney, welcome back to the Kaiser Report. Let's talk about silver. Last year it was up something like 80%. This year it started off with a bang, up big. Currently going through a bit of a sell-off. What's going on in the silver market, Mike Maloney?
Well, as far as the sell-off goes, I really don't care. Well, actually I do. I'm hoping silver will go down a little bit more because I want to buy more. I want a lot more. Silver has yet to exceed its 1980 high. I mean, we came within a breath of it, but it hasn't exceeded its 1980 high. Can you name one thing on this planet that is still selling at a discount to its 1980 price? Right now, we are seeing the euro is beginning to fall apart. The euro is a very poorly designed currency that cannot last. You can't have all these countries with different monetary policies sharing one central bank and expect the currency to last. As far as the dollar is on death's doorstep also. People don't realize that every 30 to 40 years, the world has a new monetary system. We had the classical gold standard till World War I, the gold exchange standard between the wars, the Bretton Woods system from 1944 to 71, And now we have had the dollar standard for the last 40 years. It's on its last legs too. No man-made monetary system can account for all of the forces in the free market. They eventually build up all of this pressure, become unstable, and then stress cracks start to show. That's what we're seeing now. The reflection of gold and silver prices is just a reflection of loss of confidence in the U.S. dollar. And, you know, Ben Bernanke is pretty much committed to sacrificing the U.S. dollar to try to save the economy, which will crash the economy if the, I mean, it's a catch-22. And Alan Greenspan really left him painted into a corner. There's really, he has no good options. And, you know, the dollar's doomed. Gold is going to go to infinity, so will silver. So measuring gold and silver in dollars is really, I think, idiotic. I measure it in how much stuff it purchases. And it's not purchasing near enough stuff yet. It isn't anywhere near a bubble. Anybody that says that gold and silver are high right now, they don't know what they're talking about. This thing about manipulating silver and changing margin requirements, this is nothing new. It has happened before. If you go back to '79, you'll see that, you know, the Hunt brothers, people say to me, you know, when I talk about silver is still selling below 50 bucks, it's 1980 high, they go, oh yeah, that's when the Hunt brothers tried to corner the market and drove the price of silver up to 50 bucks. The Hunt brothers were the sacrificial lambs to save the U.S. dollar back in 1980. Silver was in a runaway, and so was gold. And when gold and silver are in a runaway, it means that the death of the currency is right around the corner. And something had to be done. And they raised margin requirements several times. You know, the Hunt brothers originally, when they first started getting into silver, they took delivery of physical silver, and they actually got it out of the U.S., they flew it to Switzerland, but then they sort of got charmed by margin. Margin works well when things are going up, but people don't realize that margin is a professional's game. Margin gets duller and duller on the way up, but sharper and sharper on the way down. So you're leveraged less and less as you win. But when you start to lose, you get leveraged more and more and more on the way down. The Hunt brothers got charmed into going out on futures contracts and using leverage, and that was one of their big downfalls. They were actually worried about the dollar collapsing. They were really silver investors. They weren't speculators. They were investors that were protecting themselves from the stupidity of the Federal Reserve and the U.S. government. I just wrote an article on this. I can't believe that hundreds of thousands of people have read about the Hunt brothers and haven't come to the exact same conclusion, that the Hunt brothers were used as the sacrificial lambs to save the U.S. dollar. I see that this has all happened before, all of this manipulation. However, this time it isn't a few large investors. This time it's the masses rushing in. This time it's a bazillion small investors buying silver. And here's one thing. The precious metals always, always win. In the end, they do an accounting of the currency supply. This is one of the major themes of my book, is how throughout history a country has so much gold and silver, and then they come out with a currency that gold and silver is measured in, a national currency, and they expand the currency supply, and gold and silver lay in wait. And then suddenly people lose confidence in this currency, and they start bidding the price of the gold and silver up until the gold and silver rises to meet or exceed the value of the currency supply in that country. This has been happening actually since the year 407 BC with the first great inflation in Athens. And it'll continue to happen. It's just natural.
It's a great group of people. Everybody is hungry for information, and Wealth Masters tends to bring them cutting-edge information, some of the best information you can get, stuff that puts people ahead of the pack.
I always love coming to Wealth Masters events. The people here are the kind of people that I, in my speeches, talk about, which is ambitious people who want to make better of their own lives, who want to improve their careers, and that type of person is willing to work and willing to travel and willing to do anything to be successful.